Hey folks, hope you're doing well on this fine December 16th, 2021. Want to share some perspective I've got on the Bitcoin chart for you and see if we can figure out what is going to happen next year as we get close to the end of the year and the start of 2022. None of this is financial advice, just my own perspective, my own take, my own interpretation of what I see in the charts. First and foremost, did you realize that today was the 1 year anniversary that Bitcoin broke out from 20,000? We sat here for a long time under that range. And if we take a peek at FireCharts, we can see this is a 1 year chart, by the way, from material indicators. We can see that we sat under about 100 million in liquidity, holding us under that 20,000 range for the longest time, it seemed. And then boom, we had this big breakout to the upside. That is long and storied at this point. I feel like this was a distribution phase, kind of ignored the signs. I was subscribing to the narrative that, all this institutional money was coming in and Bitcoin was going to take off. And it did take off indeed. But, from a technical analysis perspective, at this point, we had lost the 50-day moving average. We lost the 100. We lost the 200. We lost the 20-week moving average. And through this, phase, which I think was a distribution phase, once we lost that 21, boom, things came down here. And then, of course, there was this huge amount of liquidity sitting down here as well, hundreds of millions of dollars. We could speculate that Michael Saylor from MicroStrategy may or may not have had something to do with this right here, but this obviously was a lot of institutional buying here at this level. And, obviously, many of those players are in it for the long game. I'm sure some are trading it in both directions. And maybe some of the more conservative ones use this opportunity to exit. And of course, we saw another turn back down to another 100 million in liquidity, and boom, price shot back up again. Everybody got excited. We hit a new all-time high at around 69,000. And of course, here we are, distributing again. So the past week or so, I think a lot of folks, myself included, expected to see price come down to this 43 range. And, we've seen this liquidity moving around in this area. And when you see the liquidity move up, that's obviously a good sign for bulls. But look how deep this goes. We're looking at a 1 year chart right now. And this goes from our current buy zone range. And you can see the prices, 30, or the amount of liquidity, 34 million, 38 million, 27 million, 48 million, all the way down to the 30,000 range. So, to me, and again, this might be a little, it actually even goes even lower. This might be a little speculative on my part, but if these guys had real conviction that price was going here, I think we would see more liquidity placed in these levels than we see here now. Of course, if price does go there, obviously they're going to start, if they break through here, I would expect to see rugs pulled and more liquidity placed down in this range. But I think that at the moment, anyways, we at least bounced off of this level yesterday, and we'll go back and look at the Bitcoin chart to see what's happened here. Look, we had this huge wick that took us right down to that level. I think a lot of folks were kind of hanging it, looking for this 46 range. Maybe if you had their eye on 43. I know I personally was not expecting it to punch through to the 41s, 42s, but that obviously did. But it was a quick recovery. What's noteworthy here, purple line, is the 200-day moving average, and historically, when Bitcoin loses that level, it's just never really been good, right? So when Bitcoin loses that level, look what happens. We dump. We reclaim that level is obviously more bullish. So we have broken through. We retested the trend line and retested over the past really 10 days or so. So what date was this? This was the 4th. Today's the 16th. So almost 2 weeks we have been retesting this 200-day moving average, a critical technical analysis level. The other critical level that we're looking at here, this green line, we'll switch to a weekly chart, is the 21-week moving average. Some folks like the 20-week, some folks like the 21-week. They're relatively close. I like the 21-week just because when I first got into this game, the guys I was following were preaching the 21-week, and I've just always kind of stuck with it. So to have a chance at going back after this all-time high, that obviously every bull and noob in the game wants to see that, we've got to retest and break this 21-week moving average. We went after it last week and were rejected. If we can get past that, then there's this level, prior consolidation level. It was a brief resistance support flip, but I think there's going to be heavy resistance at this level, above 55. If we can break that, then we have a shot at going up here. But what I'm looking at on the chart here is what is potentially a rising wedge pattern, which historically is a bearish pattern, meaning there's a good chance that it could break through the lower levels. And I'm going to go back to the D chart for that. So here's what I'm watching on the bearish side. This 200-day moving average, I'm watching it very, very closely, and that's right around 47,000 or so. I'll give you a good metric on it. Right, as of today, that number is just under 47,000. That has to hold. If it doesn't, and look how many times we've retested it here over the past 12 days. If it doesn't, then I'm looking at this prior support area around 42.5, 42.3. And of course, the trend line is right below that. Now, depending on what day, if and when this happens, depending on what day, the trend line obviously moves up. So that's helpful anyways. One of these, either this prior support area or this trend line, is going to be the last line of defense if we get that break to the downside. What gives me hope from a bullish perspective to the upside would be, of course, breaking that 21-week moving average to the upside, which is sitting around, let me get this out of the way. I think that's around 52,000, right? So we're basically wedged right now between 47,000 and 52,000. That's the range we're trading in right now, and that's the breakout we need to see to have a chance at going back up here and invalidating this potential rising wedge. I want to take one more look, leave you with a parting shot on the material indicators FireCharts. This is a thermal map of the order book on Binance. And what we are looking at here, this is a one-year view, and we already talked about all of this liquidity in here. Let's look at what happened here this week. Because at this level, it's a little bit easier to see how this money is being moved around to get these orders filled. Okay, let me just zoom in on this region a little bit. Okay, and I'm also going to adjust the color scaling on the percentiles so we can see more clearly what the levels are. You can see a whole ladder like start here, right? You can see a whole ladder start here. You can see very clearly this one because it's bigger, start here. What I want you to look at is where they start, where they stop, and how they move. Look, so I'm going to turn off this tag tool also so we can have a clear shot. You can see this very clearly. Liquidity moves up. Then they, maybe they got a partial fill. They move back down, right? This one stopped, moved into this range. They didn't get filled, they moved it back up here. Then we see this, right? It ends, they're not getting filled. They place it up here, trying to get filled, maybe get a couple pieces, but not the whole thing. They think it's going to come down, boom, they go here. These guys are very aggressive moving this money around, trying to get these orders filled. Then it looks like from this level, with some expectation that things might go south, we see the ladder placed down here and down here from here, boom. So I'm looking at these starts and these stops of orders. Look, here's here, this ladder right here ends, and it gets shifted right up into the current active buy zone. So these guys are trying very, very aggressively to get filled here. Sometimes we'll see these same actors put, or what appears to be these same actors, no way of proving it, but by looking at where they start and stop and where they're completely aligned, I presume that it's the same actor who placed this resistance right here, trying to get filled right here, right? They're trying to push price down so that they can get filled at this level. Just something to watch. But as we saw yesterday, we saw these bids starting to get filled, right? These guys were hoping to get filled all the way down to here, and the market order started coming in. They got front ran, right? And price shot back up. So that's a weekly view. Let's see if the daily reveals anything different here. Pretty much the same thing. You can see these actors, right? Here you go. Here's a ladder. They weren't getting filled. They got impatient. Move this whole ladder right up here. That's a pretty solid chunk of change. 3, 4, 5, 6, 7, 8, 9, 10. You know, it's basically my eyeball math is going to be somewhere around 10 million laddered up there. And then as we got closer, we see more liquidity coming into these ranges closer to the buy zone. So the fact that they're trying to get filled so aggressively is inherently bullish on a micro level, but you know, the way that the price action is poised and the way that these ladders are built, you have to wonder if these guys are just going to stay here patiently, maybe wondering if a liquidity hunt is going to come get them filled down here in the low 40s range. So something to watch. Again, we saw buying begin through most classes here yesterday. Going to, of course, watch us through the weekend and expecting kind of a volatile holiday season. In the meantime, watching the chart and going to let the chart tell us what the next move needs to be. Be watching these levels very, very closely. We talked again, the 21-week moving average to the upside, and on the D chart, the 200-day moving average to the downside. That is your indication. You know, once that breaks, and sure, we could see it break through and recover, but when we start seeing full body candle closes below that, you really have to wonder if the next level of support is going to hold. Those last two lines of defense for Bitcoin bulls are going to be this prior support area in the 42, 43 range, and this trend line, which obviously is moving as each day passes. It's moving a little higher, but if 40 breaks, you need to consider how you're going to play it. Actually, if any of these levels break, you need to consider how you're going to play it, because, of course, you can make money in both directions in this game. All in all, putting things in perspective, we're 1 year from the breakout of 20,000, and I think Bitcoin has had a solid year. I hope it's been profitable for you, and I hope that 2022 is a happy, healthy, and profitable year for you as well.